All right, good afternoon, traders. Today is August 5th, 2015. And in today's video, I want to follow up on several questions and requests that I've received regarding the first video that we put out on our Auto Trade Assistant, where we previewed the upcoming release of this new tool for the S&P. But it's not only for the S&P, it can be used on all instruments. And today I got a lot of requests for showing some sample trades from crude oil. So that's what we'll do today in this particular video format. Okay? And again, this particular tool has not been released yet. We're still beta testing it through the month of August. But I do anticipate a release near to Labor Day, and it will be available for Sierra Chart and NinjaTrader platforms first, and then we'll be following up with TradeStation as well. So let's take a look at the tool in action on crude oil today. Again, today's trade is August 5th, 2015. But before we do, I just want to highlight the CFTC Rule 441, which simply says that anything that you see on the upcoming video in the tool is hypothetical and simulated performance, and trading in options and options on futures, so forth and so on, involves substantial risk, and past performance is not indicative of future results. Okay, so let's go right to the charts and take a look at today's examples. Okay, so what we have in front of us here, I'm using the replay feature on Sierra Chart, and again, the trade date today is August 8th, 2015, so you can check out these charts on your own platforms. We are using a 5-tick range chart. Now again, I got several requests, and typically we use tick charts, but I did get requests, does it work and how well does it work on range charts? So what I thought I would do is show you a couple examples here of today's trades using a range chart. Now, before we get to the actual simulation and replay today, and again, these were live trades taken in the trading room, all right, and we highlighted. As a matter of fact, I said to my group today that we'll be doing a video on this. But what you see here, before we get to the actual trades, what you see here is you'll see two what we call discounts. All right, and these are referred to as discounts in weakening conditions. Now what we want is discounts in strengthening conditions. But these are weakening conditions, so these particular trades, although they give us signals, were never executed on the long side. So a discount basically is a long entry trade. The premium trade setup is part of our CCI crossover system, and those are the examples which we'll take a look at today, are basically pullbacks within the context of a developing downtrend. So to put things in context here for the example is this is our fair value zone ribbon, what we call, and as long as it's rising here, the fair value in price and the condition in price is strengthening. But at some point the price cuts down through the fair value zone, and then it effectuates a shift, which you'll see right here. So now at this stage, okay, the price has already begun to weaken. What we're looking for is now a retracement back up, all right, in order to position ourselves on the short side, since the market had peaked out and now the market pricing action, the auction is dominated by sellers. So that's where we're going to pick up on the replay. So let's begin the replay, and I'm going to advance the normal start, all right, to go about 3 times the normal speed. So as this loads, we'll make an adjustment here, probably in the charts after it loads. Okay, so Let me just move the chart up here. So here we start, and we'll just zoom in a little bit so we can get a little clarity. So keep in mind that price has shifted, and now we're looking to sell a retracement, okay, using our CCI crossover method. And we're going to use the auto trade assistant. So in the top left hand corner here, we've enabled it on the short only, so it's only going to trade in direction for shorts. Alright, and as you can see, let me just pause for a moment, and this is our premium signal. So this is what we call our alert bar, and it'll give us a premium price. So the trade, the orders won't be placed until the close of the bar, since it's a range bar. But even if it's on a tick chart or a time chart, the bar has to close first. Once it's closed, then the algorithm will automatically place the orders. So let's continue with the replay here. Okay, so here we are. Let me just quickly pause this once again. Alright, so as you can see, the orders have been placed. The short 3 units at 46.13 with a stop above slightly above the high. And the way I have set my algorithm up is to exit in increments of 1/3. Okay, so typically we usually trade about 3 units. And if you take a look again over in the top left hand corner here, my maximum dollar risk per trade is $300. Okay, so on a $30,000 example account, I choose 1% risk, and that brings us to a $300 maximum risk. So you can see the risk value here on the stop is $240. So we're well within our risk parameter. So this automatically position sizes us 3 units, places our stop, our risk-free point, which is effectively the same risk amount, $240, so $240 profit on a total of 3. But at this point, I've instructed the algorithm to only exit 1, so I'm pro-ratering the risk, and then I get to manage the balance of the order if I would like manually. What we'll do here in this example is we're going to let the computer do the entire trade, okay, and see if we can get all targets. So let's just continue to play it. All right. And again, these are range bars, 5 ticks each, so that's okay. So right now it looks as though it's moving up. Okay, so that got stopped out. All right, but you'll see here there's another premium that comes right back into play. There we go. Executed a new premium. Let me pause it for a moment. Now, one important thing I speak with my members about, and it probably will have happened to you. Many times when you're trading a method or some strategy, you get stopped out. And then you kind of get a little bit mad that you got stopped out, right? Don't we all? And then, of course, the signal fires once again. And then you're so mad at that first stop out that you don't take the second opportunity. And many times the second opportunity is the one that you really need to take. So you got stopped out in the first one. That's part of trading. But if you do want to be a disciplined, systematic type trader, which I believe everybody does, you need to develop the discipline that if you're trading a methodology, there will be losses associated with it. But in the overall scheme, if it's a robust methodology or strategy and it has a positive expectancy, then the very next trade setup that the method or system offers you, you must take. So I just wanted to make that point. As you'll see, a new trade setup has occurred here. Let's watch it unfold. Excuse me. Okay, so again, 46.15. All right, and I'm just going to speed it up just a couple ticks. All right, for brevity. All right, so you can see we're starting to come down now. And again, all these trades are preset. So right there, the first 2 trades are executed right at the target, so that we take one off here per the algorithm's instructions, right, at the risk-free level, and then further weakness comes in and takes out the second level, which is target 1. Now at target 1 we have a reward risk ratio of 2 to 1. Okay, so let's continue on with the replay. And we should get our target 3 here. There we go. All right, so there's target 3 hit, a third, a third, a third, and no other orders are currently placed. Now, as you can see, all right, we took our profits, but obviously there must have been some sell stops or something just underneath that, and the market drove down pretty hard. Now we're still in sell mode here. We're still looking to sell retracement bounces. Okay, so I've kept the tool enabled, and we'll look and wait for the next trade opportunity. All right, it should take a moment or two. Again, the area that we want to look at is right around the edge of our fair value zone right in here. Again, you can see volume building here, the 45.96s. There it is, touching the edge of the lower fair value zone. All right, so we are anticipating a signal here now, and we'll see how the computer handles it. There it is, beginning to paint. There's your premium signal. Okay, all right, and there it is. We got one signal there. The order has been placed. Okay, we got triggered in short 3 at 45.89. Okay, and again our stop is automatically placed, and we have a third, and a third orders pre-placed, pre-bracketed out for us. All right, and market is still weak here today. And again, these were live trades that we took in our membership. There's our risk-free point out one contract, and we'll be looking to buy the other one here at 45.71. Okay, a little bounce back up. Fails to hold the bounce, and more selling weakness comes in. We're currently at the low of the day. There's target 1, and then more selling comes in, as you can see, and ultimately takes out target number 2 here. There we go. Okay, so we'll stop the replay video at this point. So this is crude oil using a 5 range, and the end user will certainly have their choice of what type of chart they would like to use, tick, time, range. But as you can see, this gave 2 signals here, but now the first signal was the one we got triggered in on. The second signal we don't get triggered in on. Okay, and then the way the algorithm will also work is if the order is placed but not triggered, and the price continues against the order actually will be canceled, and it will be entered on the new very next signal. Okay, so hope you've enjoyed this video. I hope it clarifies some of the questions that were out there regarding crude oil. And again, we anticipate having this particular tool available close to the Labor Day time period. So hope this helps, and good trading to everybody. Thank you.